to go up, what I was noticing is, as it was approaching 170 and near that breakout point, the OVI was surging, and I just felt at this point this thing is going to break up through that resistance and it's going to fly. This looks like the most probable outcome. I'll still wait until it goes past that breakout area, but right now there's a very good chance that it is going to break out through there and that you can set up a trade to take advantage of that. And that right now you could also say that this is definitely a head and shoulders failure. This thing is not going to go down. This thing is going to go up at this point. Now, we still don't make the trade just yet. We make the trade as the stock breaks through, or we put in a stop limit order, buy stop limit order, to take advantage as the stock breaks out through the high that was made back in August right here. So let's see what happened next. Well, this is exactly what happened next. There's the head and shoulders in the blue shading here, and what happens is we surge up and through and make money on this trade without ever going into drawdown. Drawdown's basically where a trade makes a loss before we hope it makes a profit, but here it doesn't ever go into loss-making territory. It surges up and keeps going pretty much, and we've got at least 10 to 12 or even more points from Goldman Sachs, which couldn't really have been easier, and I managed the trade by use of a simple trend line. Again, I will show you that in the Trade the Banks course, because there are some niceties to how we put together a trading plan. But basically what we've had here is a beautiful bullish breakout. Now, a lot of people were thinking this was a head and shoulders and the stock was going to go down, but we didn't. And what you will see when you go through the Trade the Banks course is loads of examples, and literally you could have stuck to just a few stocks, and when they all make the patterns, then that's the time to go ahead and do this. So let's go and look at the next opportunity now, which was Wells Fargo, another big bank. Now, what we've got in this particular example is a classic bull flag. Here it is. We've got 3 consolidating bars. We've had some good up thrusting movement. This is just the kind of pattern I like to see. And not only that, but it's forming right near some previous highs just a couple of months ago. So if we break up through this dotted yellow line, we've got a good chance of making a couple of points on this stock. You could even call this a cup and handle type of pattern. Now, what's going on with the OVI? What's going to give us that extra edge and that extra piece of information that's going to help us make a winning trade? Well, the OVI has moved from a negative into positive territory, and it's been there for now a few days, and it's gone higher and has stabilized higher whilst this bull flag is forming. This stock looks like if it breaks to the upside and through this yellow line, it could keep going for a good few points, or a couple of points at least, and that would be good for us. It would be an easy trade to make, and we can make some decent money from that. So let's take a look and see what happened next, and what we can see is that it did break up through that resistance point, and up it went. Kept on going, kept on going. Now, look at this. I want to show you something that's kind of interesting in the chart. And as you get used to trading like this, you will also get to feel your way through the markets a lot better as well. Because what we have up to this point in this sort of cup and handly kind of situation, particularly in the previous month leading up to the original bull flag, was that the stock was kind of neat. The bars were kind of tight and neat, nice little pattern here. We could recognize what was going on, and that continued for a little while. Then we start getting some rather looser bars, and then into April of this year, we can see that the bars start getting a lot longer, and lots of these nasty long tails, a bit like what you get in Forex actually. You get a lot of these nasty long tails, which I don't like. And what we can see is that the market is becoming messy in this area. There's no patterns forming. It's going up, it's going down. No real pattern there at all emerging. So what we can tell is that if we weren't already out of this trade by that point in time, we would be certainly getting out in mid to late April. But I would rather you'd have been out of this trade in, say, early April as the trend line is hit. Now, let's look at the OVI. And the OVI was very positive throughout a lot of this market's move up. It just took a little peak down here, didn't get into negative territory at that point there, and then stormed straight back up again, giving us another point or so at that point in time. But since that time, since the beginning of April, we've been drifting down, drifting down, drifting down, with the OVI hitting the neutral line. But again, we trade the chart pattern. What we can see here is that when we made the trade, we'd been in a neat phase, which suggested bullishness, and the OVI was nice and positive. And as the stock went up and up and up, the market started to get a little uncertain, and that's when the markets turned ugly. And you can see that this part of the chart here is ugly, and that's what we don't want to be involved in. We want to be involved in nice, neat patterns. And when we get involved in neat patterns, our probability of success goes much, much higher. So let's now look at another example, and this one is the NASDAQ, or the QQQQ, which is the ETF for the NASDAQ. Now, in this chart, we've got quite a few things to look at, because I'm going to get to the point at number 3, but I want to go through 1 and 2 first. So what we have at 1 is a sideways range-bound market for over a month, maybe about 5 or 6 weeks, where the stock is chopping up and down and down and up. Okay, this is what's going on. The OVI is largely positive. In fact, it's all positive during that time. Now, it's drifting off just a little bit at this point in time, but it's still very much positive. So as the stock bumbles around near the top here, near the resistance point, is it more likely to break to the upside or the downside? Well, the OVI is telling us it is far more likely to break to the upside. And that's exactly what it did. There's your breakout bar. That's the bar that gets you into this trade, and then up it goes and gives you a point or two on the NASDAQ. Now, the NASDAQ on the QQQQ, a point in just a few days, and this took 1, 2, 3, 4, 5 days, or less than 5 days, 4 days for 1 point, is a very big move in the QQQQ. Q players, or people who trade the QQQQ, are very happy with that kind of move. And there it is. It's there for you, and it was pretty easy. Then what happens is this market goes sideways again for another month or so. And this time what happens, what you can see, is that it's getting a bit choppy. The bars are getting slightly wider. And what's going on with the OVI? Well, let's have a look. I take my mouse down, and as you can see, the OVI has turned largely negative, apart from 2 shark's teeth here, which came straight back down into negative territory. So what does that tell you? Well, it tells you that when this thing breaks, it is more likely to break to the downside. And you can see the action itself is much more compelling to the downside, and there's another few points that you can get as the stock breaks down through these lows, forms a bear flag where my mouse is, and then breaks down again. And again, a trend line here would keep you safe. So with all that in mind, let's now fast forward to what we have now. And this was in April 2010. This is just recently, and this is where I was suggesting that the markets might be in for some volatility. Now, the day I did it was at this bar here, right where my mouse is, that little red bar right there. So it was before this big red down bar. And I was suggesting to my subscribers that the market was poised for more volatility at that point. Now, why was that? Well, first, let's go back a few weeks and see what was going on here with the OVI and with the charts. Well, the stock was going up, which is good, and was going up quite neatly. We've got a nice little bull flag here, and the market's drifting up, quite slowly, but drifting up over a period of time. But what was interesting to me at this time was that the OVI was negative. I mean, largely negative at that point in time. And whilst the rule is the chart comes first, so this bull flag was eminently tradable, whilst the chart comes first, the OVI was not obeying it. Now, this was just with the Qs at the time. The S&P and the Dow were cooperating quite nicely, but the Qs were not. And bearing in mind what had happened before, where the Qs had been very instrumental in suggesting where the market was going next. We'd had these sideways movements, and the OVI was the thing that was the leading indicator showing us which way it was going to go next. This was kind of peculiar. So this whole up move, whilst tradable, and whilst you could make money from it, didn't have that compelling feeling about it because the OVI was negative. And so when I start to see the volatility increase here, and the VIX, which is the volatility indicator from the CBOE, hadn't even picked up on this by now, what I was seeing here was that the bars are becoming more volatile, becoming more messy. I've got this megaphone pattern here happening, and the OVI is turning negative. So again, let's have a look at this slide. We've got the megaphone pattern happening here. The OVI has turned negative, just going on a few days. Volatility is creeping up, and I can tell you at this point in time, we've got some problems coming up in the markets, and we, pretty uniquely, are aware of those problems. We were easily the first people to signify the imminent volatility coming. We did it when it was right up here, remember. The market was making a high, at the time where I was saying volatility is coming. That was the high day there on the 26th of April. And here's what happened. We got a breakout bar going underneath this support area of that megaphone area. That megaphone pattern has its own little support area with this yellow dotted line, and then you know what happened next. The OVI has gone really badly negative here. I mean, just look at it. It's absolutely just crunched downwards. Volatility is rising, and then what happens? Well, this is what happens next. The market just goes wild and has continued to do so even into this week. Now, in these examples that I've just been going through with you, we've seen three remarkable qualities about the OVI, and they're as follows. First of all, the OVI helps you make money. We've seen that very clearly. Second of all, the OVI will help to prevent you from losing money. It'll help you to spot these kind of situations where the market's about to go nutty. And thirdly, it's going to give you, the OVI will give you a sense of intuition. When you combine it with chart patterns, it gives you that feel for the markets that the best traders in the world somehow magically have, and that's what it's going to help to give to you. When we look at the OVI and we look at a chart pattern together, it gives us that vision of what's happening and what's likely to happen next. So I think I've shown you here that there really is a better way to trade, a simple and elegant way to interpret the markets and profit from them with a clearly defined plan when now to buy and how to manage your trade. Now, Trade the Banks is a trading strategy designed to find and follow the hidden money in the stock market, and the OVI part of it